Why is cash more important than profit in any businesses? Because a business can be profit-making and still can run out of cash. And there's something every business owner needs to understand because it's extremely business critical area. Profit tells you whether your business is financially profit-making, whether your income is greater than the cost incurred. But cash tells you whether you turn that profit into cash, actually that you have money available when you need to pay your bills and keep the business running. You need cash to pay your employees, your suppliers, your rent, your loan repayments, tax bills, or any other business expenses. And none of those can be paid with profit sitting on the P&L. So let's take a simple example. If you make £100,000 sales today, let's say you make £20,000 profit, that means it's 20% profit margin. But if your customer doesn't pay you for 60 days, that £100,000 isn't sitting in your bank account today. In the meantime, you may already have paid your employees, bought materials, paid suppliers, and covered all other costs required to deliver that sale. So you made a profit, but your cash has gone out before the cash from the customers has come in. This is the gap that needs to be managed. And in manufacturing, this becomes even more important because the cash can be tied up throughout the entire production cycle. Think about what actually happens. So you buy £30,000 of raw materials, let's say, I'm making up the numbers. That cash leaves your bank account. Those materials might then sit in the stock for 3 weeks before production even starts. Once production starts, you've got the cash tied up in the work in progress. Then you are paying for labor, machine time, energy consumption, subcontractors, and all other production costs. Then the product is finished, but you still haven't necessarily received any cash. It could sit in the finished goods waiting for dispatch. Then you deliver the goods and services and you raise your invoice. And your customer might have 30 days, 60 days, even 90 days payment terms. So think about the journey that cash has taken. First, the bank payments leave your bank account, raw materials come in, work in progress starts, and it turns into finished goods, and it becomes into debtors position, then turns into bank receipts when it is received from the customer. You could be reporting healthy profit while hundreds and thousands of pounds are trapped somewhere in that cycle. That's why in any business model or industries, it's not just enough to simply say, are we profitable? You also need to ask, how quickly are we converting that money invested in the business back into cash? How much cash is sitting in the inventory? How much is trapped in the work in progress? How quickly are we completing and dispatching the jobs? How long are customers taking to pay us? And are we using our supply payment terms effectively? Because yes, revenue is important, the profit is important, but cash keeps the business moving. The objective isn't simply to make profit in a business, it's to make profit, convert that profit into cash as effectively and quickly as possible. I am Yeşim, driving manufacturing profit. If you would like more practical financial management insight, please subscribe to my channel and see you again soon. Thank you.